All right, so Bitcoin now sitting at about $84,000. It did end up, just fluctuating around this level a little bit, but it seems to definitely be finding support at this, call it a sort of mid-range for Bitcoin. We kind of established a low in the low 80s and a high in the high 80s, and we're kind of just floating around the middle of this right now, which I think is completely fine, to be honest. One of the first things I want to look at is the S&P 500, and, it did gap up today, okay? So Friday, it closed at about 53.64, and today, it actually opened basically 100 points higher, which is absolutely fantastic. So we're going to be diving into the implications of what this means for the next couple of days, weeks for this market, and could we see Bitcoin actually get above the resistance levels and start to, maybe even start setting some brand new all-time highs. I know that it still sounds a little bit far-fetched to kind of discuss those ideas right now, but what I would like to remind you is that it always feels that way when the market is, X% down from its all-time highs, but obviously, that's not a good enough reason to not kind of discuss these ideas. So if we do zoom in onto the hourly time frame, one of the first big things that I've been looking at and I've been telling you guys about on this YouTube channel is just the idea here that Bitcoin definitely has a chance to kind of use this and get up to the resistance level here. Right now, I think it's doing quite well in that regard. And I do think that, if Bitcoin is able to kind of hold on to this level rather than kind of dropping down significantly further down to the low kind of 80s, that, we're still biased to the upside. I basically said the same thing in the last video yesterday, and again, saying that today right here. So that to me indicates that, we're still looking pretty good. Now, if Bitcoin can get above this high 88, kind of, this $88,000 range, then I think that the chance of Bitcoin getting into the low 90s and even the mid 90s, which is, I think, the main level on this chart is actually the mid 90s. I think the chance of all of that happening does go up as well. But this is still pretty much entirely dependent on the tariff question, on the Trump question, and it's not looking bad right now. I mean, if we look at this on the weekly time frame, we had quite a series of negative kind of weekly candles, literally from this started on the 18th of February all the way up until basically, the end of last week, or, I guess the beginning of last week, I guess. And so that's, quite some time that the market was, kind of aggressively trending down here. I think as a response to that now, we are starting to see a little bit of a pullback. Now, what I think is particularly interesting about this pullback, and I've been saying this constantly on this YouTube channel, ladies and gents, is just this pure, simple fact here that the S&P 500 did actually manage to bounce off its previous all-time high. Okay, so that's one of the best things you could possibly do in any market to indicate that you are actually pretty healthy. And just as standard procedure, absolutely nobody was interested in looking at it or talking about it. Probably most people didn't even notice it. You noticed it if you're subscribed to this YouTube channel, but most people did not. And that means that they've missed arguably the most important sign, and also the sign that we were waiting for since we were up here. In fact, we were waiting for that to happen since over here. I did let go of those ideas when, the S&P 500 kind of continued to move up, but it has now finally happened. And I think what's really, really significant about this is, we broke above this kind of all-time high back here. What was this kind of January of 2024? So going back basically a year and a bit. And now 440 days later, we're actually seeing the S&P 500 come back down to that level to backtest it. And this is a really big deal. See, if the S&P 500 did it here, that's good, right? I mean, I'm not complaining, especially considering we're on the weekly time frame right now, okay? We're looking at a pretty long-term time frame right now. It's good, okay? But if you take a long time to come back down here, it's way, way, way better. And, like with everything, I don't want you guys to just kind of take it from me. I want you to understand the logic and the psychological kind of reasons behind why this is happening. And, it's pretty straightforward in my books, okay? If you've managed to get above an all-time high and then rise significantly further from there, and then you backtest it after a very, very long time, that is going to be a very, very good opportunity for bears to seize control of the market and take you significantly lower. Okay, it's a really, really good opportunity for them to do that later on, but equally, it's a very good opportunity for bulls to recognize that we have not traded at levels this low going back 440 days, and so they actually are ready to step in and start buying. Now, obviously, at the same time, there's a little bit of market manipulation coming out of the White House. I don't want to call it market manipulation. It might not be that, but, it was certainly weird, and very conveniently timed, where policy U-turns started to happen, and it seems like this is a low that's sticking right now, right? I mean, we set this low going back now. It's been, a good number of days now. It's been 8 days since we actually set this low, and we're good. I mean, we're basically at the top of where we managed to recover. We had a little bit of a pullback. We're moving up again here on this new week. It's a big deal to me, right? It does indicate that we're looking pretty good, and the fact that we kind of gapped up and we're moving down slowly today on a Monday, I think that there's a little bit of support right here for the S&P 500 to enjoy at about the 5250 range, thereabouts. If the S&P 500 does want to kind of retrace back down into that range, and for Bitcoin, that does probably translate into, I don't know, like the low 83s. These levels are getting a little bit blurry now. It's becoming a little bit silly. And this is my point, right? Like, I really want you guys to keep this in mind. The market, it's looking good, but the ranges just have not been perfect lately. Now, many of you guys won't care about that if you've got, for example, the super cool free cash. What is going on here? If you've got the super cool free cash available to you all with the links in the description, obviously Bybit linked right here will give you up to $30,000 in completely free trading capital for you to throw back into the market after you start trading. And they're also running this very, very cool competition here where you actually get a liquidity shield basically from slippage, which is really, really cool. So if you're going to be trading anyway, you have a chance to win a share of $1 million in that prize pool. Check it all out if you're not from a restricted region. They won't even let you trade on these platforms if you're from a restricted region, so be careful, follow your laws. But bringing it back to the YouTube video here, I do think here that Bitcoin, is looking like it's got some kind of blurry, mushy levels. But the good news is that I don't think we're going to be lasting here for very, very long. Clearly, we have a new breath of life in these markets as far as volatility goes under Trump. And that could indicate quite a bit more movement coming in relatively short periods of time over these next weeks. Now, if we take a look at Bitcoin's dominance, it is continuing to move back to the top of this range here, and this is a very small range as part of a very, very big uptrend. I don't know, there's always somebody that wants to disagree with me on this, but they've literally never been correct, and I've always been correct about this analysis. I don't think that's going to change right now. Bitcoin dominance is actually pretty easy to read. I think that's one of the reasons. It's not just because I'm super smart. Maybe it's got something to do with it. Maybe not. I don't know. Probably not that smart at all, to be honest. But Bitcoin's dominance itself is just an easier chart to read. If you're getting stuff like this wrong, then more likely, it's not that you're stupid. You might be. I don't think that's the case. I think more likely you're probably just really emotionally entangled in these markets. And good luck to you, sir, if that's you. That's not going to work out particularly well. But Bitcoin's dominance still looking poised to kind of move up. And, on those notes, here's Ethereum against Bitcoin, just suffering, not doing particularly well. Here's Solana against Bitcoin, now at resistance and struggling as predicted here. So we're going to have to watch this to kind of see how this does play out. This is a really dangerous place for Solana right here against Bitcoin. Even if Bitcoin moves up, you guys got to understand this. Even if Bitcoin gains, dollar values, I mean, that didn't stop the dominance chart from going up, right? If we kind of quickly just overlay Bitcoin on top of this chart, just so you can kind of get a sense of what a bull market does to the Bitcoin dominance, basically, look, so we're trending up, basically more or less from this kind of yellow line. I could probably move this just a little bit. Actually, I got the dotted line right there. The thick line shows when the dominance, I don't actually know what it does. But anyway, we've got this very, very faint line right here. And if I go ahead and make it a little bit thicker so you can see that clearly, that's basically the low, right? That was a low for Bitcoin. That was a low for the Bitcoin dominance. The pink line, of course, is Bitcoin's price. And you can see all throughout the uptrend, Bitcoin gains dominance, which I think is very, very telling indeed. Definitely very, very telling that, when we're moving up, we are still seeing increases in dominance. But take a look at this. When Bitcoin starts moving down, let's drop another vertical line right here. When Bitcoin starts moving down, the Bitcoin dominance still goes up, okay? So we've got Bitcoin, again, just painted here with this beautiful pink line. Let me go ahead and move this chart just a little bit so we can see this clearly. Take a look at that, right? So, pretty clear here. We've got a high set for Bitcoin. It starts dropping down, and Bitcoin dominance still moves up. So it's a lose-lose situation. You lose on both sides here. The exception is when, alt season is ready, right? And I think that now there's actually some speculation, which I think is kind of funny, kind of sad, but mostly true, that the reason we did not get a real alt season is because of websites like Pump.fun. It's because of the mania, the meme coin stuff, all of that nasty stuff that really kind of degraded this market, even as if we could get degraded further. My goodness, this market is so cooked. I think it was one of the reasons that we didn't get an alt season. We might have gotten one if it didn't happen, but look, it happened. It's done. It's probably going to keep on happening. This is a very scammy market right now, and I don't really see that changing. To be honest, it changes when there's liquidity, right? Like if there's a lot of liquidity, if there's a lot of happiness, if there's a lot of excitement, you're going to start to see those dynamics change a little bit. But until and unless that happens, you're stuck in the same boat, and that's why I don't really think that that's changing, and that's why again I still think that Bitcoin's dominance has a pretty good chance of kind of continuing to get higher, potentially toward that 70% range. So again, even if Bitcoin goes up, your meme coins, your whatever coins, they might go up against the dollar, but you're not going to be doing particularly well against Bitcoin, and that's actually I think much more important. So because we got to keep this in mind. I think a lot of people just miss this because whatever, Bitcoin's 100k, it's 80k, whatever, you can't really afford one. I get it. That's a good reason to not really look at it, but what we need to understand is that if we have a baseline that Bitcoin is the safest crypto that exists, then surely you would measure your success against that, right? Like against the S&P 500, for example. If you're in traditional finance and you want to buy Tesla stock or Apple or an Nvidia, but you understand that the safest thing you could possibly buy is the S&P 500. If you're buying a stock and you're taking on extra risk compared to a very, very safe index, and you're not actually making much money compared to that index, then your risk to reward is off, right? We gotta understand these concepts really well. This is what this YouTube channel is about, right? We're gonna do a lot of very actionable analysis, but at the very same time, we're gonna have very actionable kind of trading insights as well. Because unlike most other YouTube channels on this platform, I am actually a trader for real. Like I actually trade, and this is what I do. And because of that, I have the very realistic takes that you are gonna want to be interested in as well, compared to somebody else that can just kind of talk shit for 10 minutes and as long as it kind of fits a narrative and it fits what you want to hear, then they're good, right? That's obviously not what you get here. So if you do appreciate that, do me a favor and smash up those likes and double check, of course, that you are subscribed to the YouTube channel. But one of the big things that we got to understand is, that kind of risk to reward calculation, okay? If you're taking on excessive risk, you must be rewarded much more. Otherwise, it's not worth it, right? Like, even if your risk kind of just scales, linearly, that's not really worth it, in my opinion, either, right? Like, you've got to, if your arbitrary risk starts at 1 with Bitcoin, but you take 3 points of risk with another coin, I want to see at least, like a 4x better return or a 5x better return to justify that. If it's just 1 to 1, 3 to 3, then that's the same thing as just putting more money in Bitcoin. You know what I mean? Like, it's not really worth doing that, in my opinion. I want to see something where it's a little bit more asymmetric. And that's why I'm talking to you guys about Ethereum, right? Like, this is why I think that Ethereum is a pretty good, bet for me, at least, because, I don't think that Ethereum's going anywhere. It's part of the Trump family fund. It might be part of some White House stuff. I don't know. It doesn't really matter. It's clearly, it's one of the big, I don't know why it's so hated, probably just because it's not doing well, but Ethereum itself didn't change much as far as I know. And certainly, a drop like this against Bitcoin, I don't think is warranted. I do think that it's probably warranted, but I don't think it's going to stick, right? I think that, give it 6 months, give it a year. I don't see how it's going to be trading this low. I'm sure, I don't know, I can't see the future, but I feel fairly certain at this point that Ethereum could actually rise significantly higher. And this is a really good example of kind of that asymmetry between risk and reward, because if I am right about this, then I am taking on more risk than Bitcoin. But for me, it doesn't feel like much more risk, because again, like I said, it's a pretty well cemented coin. It's, if I'm not mistaken, it's the second crypto that was ever created. So it's been around since like 2016 or 2015, if I'm not mistaken. So we're talking about like damn near 10 years now, 8 or 9 years, right? So a very, very long time that Ethereum's been around for, part of some, like I said, big Trump family funds, whatever. It's checking the right boxes for me to say that, hey, this thing is sticking around, it's not going to die. So it doesn't feel substantially riskier than Bitcoin to me. But, on that reward side, I mean, just to get back up to like this area, which is honestly like quite a low valuation for Ethereum against Bitcoin, in my opinion, it has to more than double, right? And so that means one Bitcoin coming in over here exits with 2.2 up here. And that is just great. That is really, really good to me. I think if it gets even higher, like this was a very important range of consolidation, which I think Ethereum could reasonably get back to inside of a bull market. That is a 170% rise against Bitcoin from its current prices right now against Bitcoin. So again, just, really, really good kind of asymmetry there from what I'm saying. I could be completely wrong about this, but my history trading Ethereum has actually been pretty good. So I don't know. Obviously, here's my disclaimer. Obviously, just, do your own research. Don't be an idiot. You already know the deal, ladies and gents. We don't need to go into that too much. But here's Trumpcoin right now. Not able to hold on to its gains from yesterday, and it is dipping down by just a little bit. This is a very, very clear area of support, though, for Trumpcoin. Probably, again, just dependent on other factors like Bitcoin and the S&P 500, of course, though. So that's going to be what we have to kind of continue to look at. The dollar is really interesting here. I mean, it kind of established this range going sideways for the last couple of years. Bear in mind that this was all during Biden's presidency, but we kind of entered this range at, say, like about over here. Let's go back about 850 days to December of 2022. And the dollar is now out of this range. I don't really know why, but it also doesn't matter. That's why I haven't looked into it. I'm sure there's a pretty simple explanation for this, but maybe it's got something to do with the tariffs. But in any case, fake outs are pretty common. There was a little bit of a fake out here, a fake out down, which were basically at the same level of right now, and a huge fake out over here. So big fake outs, very, very possible for the dollar in these ranges, so I wouldn't be too concerned about it. But if it does kind of recover, that typically would indicate some kind of danger for our markets, crypto, traditional finance, whatever. But lately, even that hasn't been happening. When the dollar was going up, the markets seem to be fine. So I don't really know what's going to happen there. But I do know that when it falls, that does still tend to kind of do well for us in these markets. But again, not even recently. So none of this stuff really makes sense. But I think it will be important to keep watching, and that's why I keep on bringing it to your attention occasionally. It's not the most important thing at play in the market right now, but it's not something that I'm going to ignore either. So I think that is a pretty big deal. That's pretty much the altcoin picture, though. I mean, some of these altcoins are getting into some interesting places right here. Like, here's Solana basically down at support right now against the dollar, which is, it's honestly a pretty good level for Solana. I think, if we zoom out, we can really start to appreciate just how much has happened for Solana at this price zone. Just going back, this is only 2024, but if we go further back, there is still a little bit more from earlier on. Take a look at this. It's, which range is it? It's right here. So if we trace this back, we're getting some minor kind of reversal stuff happening. Look, these coins are kind of ready to go. I think that, again, just as usual, they're just kind of waiting to get that okay, basically, from the stock market, more or less, and until and unless that happens, you can't really expect too much. So we're just going to have to wait to see how this continues to play out. But no doubt I will be right here whenever something does happen. So definitely make sure that you are subscribed and stay tuned to this YouTube channel so that you don't miss out on this very, very powerful content right here. S&P 500, again, just, moving up nicely, throughout the course of this Monday trading session here. So, and there is still, another kind of 2 hours and a bit left, and, an entire 4 days left for this week. So it's looking pretty good, ladies and gents. I mean, things would have to, we would have to kind of hit, next resistance. But this is the thing, is that if we start hitting, the next resistance levels and they start giving us some issues, that's still not bearish in my books, right? We can get up here and get a bit of a rejection, but I'm just going to tell you that I think support might come in over here. You know what I mean? Like, I think that, look, we can definitely, expect that, this market is still in a bad place and expect that things are kind of looking bad. But my point is that, if that is your thesis, you're running out of reasons to back that up. That's kind of ultimately my point. For me, we're always on a spectrum. I think a lot of people kind of fail to understand this, and I'm going to correct that for you right now if you're one of them. For me at least, being bullish or bearish is very much a spectrum. Okay, it's not like on and off. It's there's a spectrum, and you can build a case, right? And before that bottom happened, where the S&P 500 managed to bottom out at its previous all-time high, we were probably a lot more kind of like, let's say, here on the bearish side of the spectrum. But now that we're getting that bounce, and you know what I mean, and these bounces are sticking, and you're carrying on, and it ended last week's trading session. Now it's Monday, and Monday is not looking too bad either. You know what I mean? Like, it's just kind of starting to push that toward this side of the scale here, and it can easily come back. It can easily get pushed back to this side. I mean, there's nothing stopping that from happening either. But we're looking good. You know what I mean? Like, there comes a point where it stops being reasonable and it starts becoming, you want to fulfill a certain idea because you're emotionally attached to it. That's not where we want to be. Okay, save that for outside. Save that for dealing with your girl, your kids, your job, whatever the hell else you want to do it with. Probably nowhere, is going to benefit from you bringing that attitude in, but certainly not as a trader, because it will punish you very, very quickly if you take those kind of approaches. Right? We want to make a case. We want to attack that case. We want to poke holes in it. We want to see if we can actually poke holes in it, and if we can, then okay, we kind of have a problem. But if it's looking kind of robust and it's looking good, then markets are the markets, right? We need to stay emotionally detached from them and see them for what they are. And I think that's kind of what we're doing here. So if you have enjoyed this video, you know what to do. Smash up those likes, double check that you're subscribed, do all that really good stuff, and we'll see you all in the next one. Cheers.